London times. It is 15 minutes past, I think, 7, sorry, 15 minutes past 5 a.m. Excuse me for the slight delay. So let's get started out straight away with the Euro USD. We got the 4-hour chart flashing up in front of your screens now. And remember, last session, the Sydney Tokyo, we were talking about one more potential high before the pullback could resume, right? Because of the diverging scenario. Now we've got that required high. Uh, I think in the past hour, Euro has print 875. I think that's a shallow high which was required to complete that five-wave rally or a five-wave structure of the third wave. And I think now we should be ready, or Euro should be ready to decline. So maybe you can maybe we can close that path, and we can now move this higher towards I think we should be good to drop back towards 663. That is just a bit higher, just a tad bit higher. But tell you what, I think with this high, Euro has now produced a bearish divergence on the hourly chart. Let's start from the hourly, and there you are, the bearish divergence. The price is moving higher while the RSI lagging behind. So we've got the divergence on the hourly, plus I think should be there on the 4-hour as well. Not exactly seen here, but that's okay. I mean, there's a bit of congestion here. But tell you what, in a nutshell, I think there is a diverging scenario right now being produced on the hourlies and 4-hourlies. It sets the stage for the next trigger, which should be out in about 3.5 hours, 3 hours and 10 minutes or so, and that's the non-farm payrolls coming out. So it should be quite a bit volatile. I think Euro could be dropping lower towards the 670 or 50-60 range, right? That's a 38.2% touch as well of wave 3. It should be very interesting going forward. Okay, trading point of view, those who are holding long positions, please continue doing so. We never know when the correction is going to come. Otherwise, it's all good on the north side. And those who are wanting to take fresh positions now, please wait for a drop. It could be today, it could be early next week, around the 650, 670 zone. Kindly keep your stop losses around 1.0350. All right, so that's the story in the euro. Let's move on to the dollar index now. Only for today's this session, we'll keep it a bit brief with only 4 instruments. Euro, dollar index, pound, and gold. In the New York session, we'll touch base with all the instruments and their respective stories. Over here as well, you can see that there is a new low in place, which was quite a bit expected after that wave 4, potential wave 4 in the last session that we were discussing. Also, you can see very well that a past support of 103.36 is just about to be taken out, right? So that is also a good sign in the sense that a pullback could be due any moment. Let me readjust the Fibonacci retracements here. I won't be surprised if you see if we see a corrective rally back towards 105.0010 levels, which is the 38.2% touch, all right, and that could be wave 4, where we got wave 1, wave 2, wave 3, possibly wave 4. It's going to be a very sharp, if we do an Elliott channel, it's going to be a very sharp, steep decline between 1 and 3. And let's go with wave 4. I think this convergence comes on 12th of March. 12th of March is uh, Wednesday, next Wednesday. So by that time, we should be somewhere close to a pullback around 500, 105, 105.10. All right, and that could be. In just a moment, I need to power my. All right. So 105 would be the area where we'll be looking forward for re-entering on the short side. Now this is for those who are still sitting on the sidelines or have booked all profits. All right, and if you're already holding shorts, and it's only one position, then I would suggest that humbly stick to that short position. You never know. It's already 103.50. Remember, we started with 110. That's almost 700 points. That is more than 10% decline now, and it is 13th of Jan, so just about 1 month old. That's quite a big drop actually in the dollar index. All right. Let me have a look at the RSI here as well. Now this is the first time that we are seeing a diverging scenario on the 4-hour chart, plus possibly on the 1-hour chart as well. There you are. Prices dropping lower while the RSI lagging behind. So this is for the first time in at least the last 24 to 48 hours, or not even 48 hours actually. It's the entire week. The first time we've seen this happen, where we've got a bullish diverging scenario in place. All right. This drop has been quite steep. Within 1 week, it has given almost 400 points in the dollar index. Now that is a bit unusual. So I can't say it's impossible, but it's a bit unusual. Uh, but some these extraordinary circumstances are created when you see the third wave down there. All right. So trading point of view, please wait and sit on the sidelines for now. I think the event that we are facing or going to face in the next 3 hours or so, it calls for a bit volatile action in terms of pullback towards 105 and then a decline continuing towards 101.56. Now it's going to be very sharp in the sense that by the time the March series comes to an end, remember last week we were talking about, I think during these times, last Friday, I think we were talking about what March could have in store. That was 28th of February. We are just around the 7th of March and we are down 400 points in the dollar index. Visa versus 400 points higher in the Euro USD. Forget about pound. It's the most I think it's rallied the most. So now at least some corrective pullback before the next wave begins to end up the March series. That's what I'm trying to say. That could bring us very close to 100 in the US dollar index, and it could also, I think it would also bring us very close to 1.1275, I suppose, in the euro USD. So the next leg would bring us close to those highs, the September 2024 high. All right, the next wave. I think similar thing should be seen in pound. One more shallow high. Let's adjust the Fibonacci. It's not a huge adjustment that we need to do, just a few points. But I think one good thing which might appear, and this is a diverging scenario now, and it's a good divergence. So pound is setting up for a drop now, and what could be the best scenario, like an NFP? Yeah. So it's going to be. We are not suggesting short entries. Absolutely ruled out. We are just suggesting that in today's NFP noise, or the NFP price action, we might get what we have been waiting for, a corrective decline back towards somewhere in the range of 26.18 pound, 105.10 in the dollar index, and I think 1.6670 in the euro USD. All right, these are the ranges which we will be looking forward to enter in all the three instruments respectively. I think there should be some kind of diverging scenario. Yeah, not a great one as strong as 4 hour chart, but yes, this is a diverging scenario. Bearish divergence. It is just for the sake of the correction, nothing else. But as far as the trading point of view is concerned, I mean, as far as the trading is concerned, if you are holding just one long position, it's recommended highly that please remain on the long side, except for those who are waiting for re-entering on the long side. This is good. This could be a good opportunity going forward, I think, as early as next week. And which is the September 24 high. Now that is going all the way towards 1.34. Remember 1.34, and March series completes. That should be a huge one for another 500 points, another 1,000 points actually, from 800 points from 1.36. All right. Okay, let's go back to gold. Do you see that congestion happening? So if we look at the counts here, I think it's a kind of a triangle which is being held down. So if you look at this drop, that is wave 1, and wave 2, it's clear. The first one, the first drop, and a corrective wave. And then we have a 3 wave. Oh, I think it's A, B, C, D, and E. It could be a triangle which is now completing, or if that is one of 3, it is A, B, C, and there could be one more wave two more waves actually before the second wave of the triangle completes, and then it drops lower to I think towards let me draw the boundary here. And there is also a bullish push possible, and we cannot rule out that as well. Right, so I think we've got to just be a bit careful in case of our stop losses. 2960 is where we would like to keep our stop losses. I think this would not be a bad idea to re-enter on the short side, and 291820 with a stop loss of 2960, and a potential target of around 29 not just 29, actually 2810. That would be the downside target that we expect. The only reason is if this is an impulse wave higher, then we'll have to readjust ourselves very soon, because if that is wave 1, 2, and then 1, 2, 3, 4, and 5, and then wave 4 and 5, then it's going to be maybe one more touch above 2930 and then a reversal. That is also possible. Bottom line, till the time prices stay below 2957, possibilities there are a good high probable chances for gold to reverse lower from here. But if that is gone, if 2957 is gone, then I think gold is telling us a clear story that it's not an ABC. ABC is complete. So the minute wave 4 is complete, and then minute wave 5 is already underway. All right. I think it could be 3 3, so it could be a diagonal as well, which is unfolding. It remains to be seen as what the price action is unfolding in the next few hours. We've got a good trigger coming up. I think we'll be sending out a sell signal in the portal as well. It's a good range to enter on the short side again. All right. So let's keep this current session a bit brief with about four instruments analyzed. When we come back, New York session 2, we'll touch base with all these four again, and the stories in Bitcoins and Solanas and the Dow Jones and SPX and Nasdaq as well. All right. So once again, excuse me for the delay, and uh, once again, thank you for tuning in. Until the next session, as always, please do take care and God bless. Goodbye.